Good afternoon, traders. This is Christian Primer at Start Market Trade Group, and this is your end of week market recap for Friday, November 3rd. What a long week this was, right? We had a little bit of everything in terms of macro events. We certainly had just a huge amount of macro events and U.S. economics that came out, a Fed meeting, Bank of Japan meeting, Bank of England meeting. We had this Treasury meeting that happened as well Wednesday, which was a pretty big catalyst for some of today's moves. You had huge moves in bonds, the dollar. And then of course, that translated into huge moves in equities, which I'm going to dig into in this video and try to keep it a little bit short for you so that you can enjoy your weekend. It's finally a little bit warmer, and I say finally, but it's only been cold for a couple days in New York City, and hopefully it warms up for Sunday's marathon race. But it's been like 35 degrees the last couple days. It's a little bit above 50 now, so this way try to keep the video short and sweet, so you can enjoy maybe a few last Oktoberfests if you can still find them around. Risk disclaimer in front of you. Everything that we're going through is for information purposes, not giving out any advice or recommendation. So before I get into some of the themes for the week, what I will say too is if you want kind of a free look at Tribeca Trade Group in terms of what we do in terms of our midday notes and our end of day notes, you can sign up here, tribecatradegroup.com, and you could just put your email address in here, and you will get for free for 5 days. You will get those notes, which gives you a really good sense of like what we're doing on a day-to-day basis and how we kind of go about and through our day. You won't get access to our trading room, but you'll get access to like some of the charts that I'm watching most closely setups. I usually provide charts on any of the names that I get into for that day for swing trades and kind of what I'm thinking. And then as well as I provide things like what's the breadth looking like for the day? What is, where are the how many 52-week movers do we have? And a sense of all kinds of things like that, trends and themes for the day. So that's where you go to do that, and give it a shot. I would love to hear your opinion or feedback on if those notes, how valuable those notes are to you once you sign up. So I will start with today's performance. It was just kind of follow through. Big overnight moves again happening too, because we had a jobs number that came out this morning, and right now we're in this environment where the bad news is the good news. And I went through this. We were talking about this. I do a Q&A on Fridays, and I was kind of just rehashing the week a little bit. And if you go through some of the economics, by the way, much lighter next week in terms of economics, but if you go through and if you look at what transpired this week. Go to the first. Let me just pause this for 1 second. Yeah, so to kind of just rehash the week, like just really quickly, but remember going back to the first of the month, that is when we had both the Fed meeting as well as this Treasury quarterly budget statement, which came out, and as well, like it was kind of funny because the Fed meeting really just took a backseat. There wasn't really much reaction or much new news that came out. There's some reading between the lines, which people in the media do that, about whether or not there's going to be any more rate hikes, but those expectations really didn't change much. More so on the economic data. So if you want a little bit of a visualization, but here's where we were on the first of the month, right? This is bonds, by the way. This is TLT, right? So this is where bonds begin to rally, right? This was right around that 8:30 Treasury budget statement, which was a nice move. And then if we fast forward till 10 o'clock in the morning, which was here, right? That's where bonds took another leg higher when the ISM data came in lighter than expected, right? Which was right in here. Yeah, manufacturing 46 48.7 versus 49. So that was really the kind of catalyst for bonds to get going. Notice this was where the Fed meeting was. There wasn't very much of a reaction. And then we really kind of saw some follow through as more economics that came out for the week, and showing like initial jobless claims actually ticked up a little bit, not by a huge margin, but a little bit of a change in tone. And then of course today you had the monthly jobs report coming in lighter than expected, so that bad news was good news, and you could see the further jump in bonds and and interest rates going down. So where does that, so, and why do I rehash all of this? Just because it was such a catalyst for this week. I really think that this market has been taking a lot of cues off of what bonds have been doing. We had obviously for a couple of months, notice how when equities kind of faltered a little bit once we got into August, September, October was back and forth, but so was bonds, right? This is what bonds did in the beginning of the month, right? That's where equities rallied too. So, and of course, different equities act differently. So for example, this week, the FANG stocks, or the Magnificent Seven stocks, they had earnings the last couple of weeks, so that was a factor too. But that wasn't the big performer this week, and those names have held up pretty well. And that's mainly because they have refinanced, their debt. Like Apple, I heard this on the internet, so I don't know if it's true, but I heard that their debt is financed at like 1.25, somewhere around like 1.25%. Right? That's much different, and that's why they don't move as much to interest rates as what TLT does. Now, of course, when you look at things like home builders, when you look at biotech, right, those things have been moving quite differently. And if you look at the week's performers, which I have right over here for this week, look at what performed the best this week, right? Those interest rate sensitive areas. Look at regional banks and the home builders, both up over 12% for the week. Biotech as well, right? Up 11%, right? So that's why I kind of go over this a little bit in detail, because there are so many effects on what interest rates are doing. You also had solar, which has been, how many weeks in a row did we see solar on the worst performing, on the top of the worst performing lists, up here on the top right? Well, finally, the move in interest rates gives them a relief bounce, right? The semis had a huge week this week too, up 8%. Transports too, which were another so beaten up area, up 7%. So, notice all of the, I think there's about 12 different sectors here, groups, all of them up over 7% for the week, which just tells you what kind of a colossal week we had in terms of performance. And there's the small caps too, which led for the week, which were up 6.7%. So I wanted to talk about a couple different concepts in this video, but I'll just get back. I just want to talk about a couple other things that transpired for the day. You had the VIX, which fell all the way down to 15. So, really that move happened very quickly. The micro caps were up 3.2%. But this week, with all of the economics that came out, pre-market, such as the jobs report, a lot of the moves were captured in the overnight. So if you put on some trades, this was more of a swing trading type week, because I think a lot of the moves were captured in the overnight market. For example, look at the change of these indices over here, which I hope that you can see. But for example, IWM was up 2.7% for the day. Right. And most of that coming in the overnight session. Between the open and the close, this only went up one. Now, again, that's still a big performance. To move up 1% over the trading session is big, but you always want to know where the majority of the gains arise from, or were derived from. And that's the overnight move. And I put together this chart, if I have it here someplace. Well, let me correct myself. I didn't put together this chart. I borrowed it from I guess this is NASDAQ Dorsey, right? And this is from a few years ago, but the principle still remains, right? And again, why am I going over this, right, on a Friday video? Because it's just important to know like where the majority of the gains are derived from. That orange line is if you hold overnight. So basically buying the close and selling the open, look at the difference in performance, right? Versus the blue line, which is just holding intraday, meaning buying the open and selling the close. Now, some people only like to day trade. That's fine. It's not to say that you can't make money day trading, but it's look at the difference in the performance of how you're doing that and where like the alpha is, and then that's always with the overnight risk. Now, this always kind of is funny to me because sometimes what transforms people from more like swing traders into day traders is they have that bad experience every now and then where they're holding a name and overnight there's some bad news on the stock and the stock goes down, right? That scars people mentally because people don't like to have those surprises, and the market does have that. But based on how your thinking is, right, we remember those situations much more than when we remember the average move, which is the average move over time. You could see is just better, so much better, but we don't remember those things. We remember the one or two events where something bad happened, right, and how bad we felt then. And people make those types of things that happen to people make changes based on that and say, hey, well, I'm not going to deal with that again. I'm only going to day trade. Well, I think in a week like this, there was a couple times this week where just the gap ups were so large, and it makes me think of this principle, which I always like to remember that because that's where the gains are associated with this market. So one other concept I was going to go over too, when you look at some of these names, because I'm a trend trader and I always have a difficult time when, like we did in the beginning of this year, where a lot of the bigger moves were happening in names that were in downtrends. So I haven't really want to be involved in this small cap index at the small cap performance because it's sideways to me over time. But that doesn't mean that you can't capture some of these big moves. So the way I kind of think about when these big moves happen like this in names or areas that have are either in downtrends or in very sideways charts, is that you could day trade anything that you like as long as you have a stop price, right? In terms of swing trading, right? And sometimes, if you're an options trader, you could take swings on some of these things, right? Because look at the performance in ARK. Right now, this is not something that I ever want to own because it drastically has underperformed over the last 3-5 years. Name your time frame. This portfolio growth at any cost is what I refer to it. It has drastically underperformed, but it's not to say in the short term that you're going to get some big moves. And this was a huge move by this ARK fund, which again is. And you could kind of, the takeaway from this is a big move in interest rates. Notice what happens here, right? So not very good in a rising interest rate environment, but when interest rates kind of back up like they did this week on the long end of the curve, right? Because that's what we're referring to. This group can really move. Now, would I get involved in this for anything more than a day trade or an overnight trade or taking a flyer on a option trade? No. But it just shows you how violent some of these moves can happen. So normally we say stairs up and elevator down, right? That happens quite a bit in some names, but names that are depressed like this, it could be the opposite. It could be stairs down and elevator up, right? It kind of works the opposite in names that are in downtrends. But ultimately the prevailing trend is still down here, and it just rallied up to the 200-day moving average. But there's many different ways that you can kind of trade, and you can try to make money. One of the things that I was really impressed with this week, and a big difference from last week, is just the earnings moves, right? It was like pulling teeth the last couple weeks for a name that had good earnings to actually hold on to those gains that happened in the overnight session. Today, we saw things like, this may not be a name that was on your list, but look at IT Gartner jumping out to new highs. This started with Deckers last week, right? Deckers was like one of the first names, not the only name, but one of the first names to hey, really kind of pop out to new highs. We hadn't seen that at all, besides a few one-off moves prior to this week. now you had things like DraftKings had a big move. DoorDash, so like this is great because this is gonna set us up for the next quarter. That's usually how earnings season works, is that names that have big surprises like this, and DraftKings is DoorDash is another one that had a follow through move today. But notice how these names like just popped out like this. And what these names will do is hopefully provide setups throughout the quarter, right? They have big moves like this. They'll consolidate and they'll kind of push back to like let the moving averages kind of catch up a little bit, and they'll provide some trading opportunities. Microsoft was a name that I got long this week. Now, clearly not as fast as a mover as some of those other names I just mentioned, but there's nothing wrong with a name breaking out like this and mixing this into your portfolio. If you're holding like a lot of like small cap growth names, it's nice to have something that is moving in the right direction, but a little bit but a little bit slower. CAH was another really impressive name, right? This is Cardinal Health, right? They didn't get into AI or anything like that, but it's nice to see it's not just one group, right? I know that that's been part of a complaint that you hear over and over, is like, oh, it's only 7 names. Well, there was a lot of other names that really made some nice moves this week. One name that I went long this week is Jabil, right? This is speaking of a name that had strong earnings, but this is exactly what I'm referring to, right? Had this big green candle follow through. If you rode this all the way up, has pulled back some, comes back into the 50-day moving average, bounces, and and that's a really nice trade setup. So those are the opportunities that we're looking for. And I think right now I've got my list of strong earnings names are, that's not the right one. Bear with me one second. Like I said, I've got, I think, I've got a lot of watch lists, right? I've got 4 pages of names now that have had strong earnings and that will set up as the quarter progresses. Look at MEDP, the same thing, gapped up on earnings, pulled back a little bit, and then provides another good example, right? Look at Logitech. It's a move from last week. So again, I'm not going to go through all these names, but I think this kind of gets, now that we are officially into this better seasonality, even though I think it just took a little while for it to kick in. But we are in a better seasonal period. You've got interest rates moving in the right direction. The dollar, which made a new high this week, pulled back, right? So this coincided very nicely too with what we saw this week, is that the dollar topped out right at our level of resistance, 30.18. You've heard me talk about that 30.17, 30.18 level for about a month. So we capped that and got rejected there. So I think that even though we're a little bit we got a little bit overbought here in the short term, I think we're going to have some good setups. Continue to have that, as well as and these earnings names that excelled are going to give a really nice group of opportunities. All right, guys. So that is it for the weekend video. Have a great weekend. Make sure that you sign up for our midday and end of day notes, and I'll see you on Monday.